So when you talk about a company's revenue, you're also often talking about sales, their top line numbers. You're talking about the money that is received from normal business operations. We just said that. This is operating income is revenue. It's from the sale of goods or services. Netflix is the service company, so they're not selling computers, but they're selling the content that you consume on a computer. And it also includes non-operating income, which is infrequently and non-reoccurring. That's a mouthful, but you can look that up on Investopedia or public/return. This company, I'm going to skip over that because they had some really, when you look up the stock stuff, it's important to know that sometimes they report their numbers in thousands, and these will be like millions and hundreds of thousands. And sometimes they report it in billions, so it can be really, really weird. And I'm not prepared for that today. But let's talk about earnings per share. This company has EPS, earnings per share, basic earnings per share of 9.91, and they have a diluted earnings per share of 9.65. And earnings per share versus diluted earnings per share is a measure, and dilution occurs when a company issues new shares of stock. So not going to pick on AMC or GameStop, but some companies, while you are buying your stock and selling your stock or holding your stock, they will introduce new shares into the market. They will create new shares. And if you ever had a pizza party, you cannot create new shares of a pizza. And if the company's a pizza, the only way to get a bigger slice is to cut into someone else's slice. Only way to get more slices of pizza, my family used to do this at pizza parties. You 8-slice pizza, cut it in half. Now you got a 16-slice pizza. But guess what? It's still one pizza. And that's what diluted shares is. That's what happens when companies issue new stock. They dilute you. They water down your ownership power. They are essentially cheating you, but they do it to raise money. And it's not always a problem, but just know that if a company is issuing new shares, it's not a good thing. It's not, oh yay, we can buy more stock from the company. It's the stock that I have on hand is now worth less. The votes that I have, I used to have 10 votes, and they used to have the full power of 10 votes. Now those 10 votes may only have half of that voting power because you have more share owners, and now my vote is worth less. Not to be confused with worthless, but it's a good way to think about it. You don't want to be diluted. I don't think about anything. Alcohol is probably the only thing that I want diluted. You don't want to be diluted in the stock market.